As a property investor, many of us thrive to use as much money that we want to get from the bank, which is generally called other people's money. But the biggest problem that we always have is that many of us do not understand how to get this other people's money. So in today's video, my good friends, I am going to be showing you how you can get very close to 100% as and when you are making your applications for your bond. And this is particularly for some of us who are starting off in the real estate and we are still buying residential properties and we are making them investments and you are still employed. So this video is for you wherever you are sitting. We are always here talking about all of these things. If we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. I'm going to fly away with some of the obvious things. I know that some of us, it might not be obvious, but I'm going to fly away with talking about some of those things that you should be knowing to do already by now, especially if you've been part of the tribe. All of these things, you should be able to know it. I am answering the question, TJ, how do I qualify for a home loan in South Africa? And what are the things that I should avoid? Are there some common mistakes? So today I want to focus more on the common mistakes. But before we go to the common mistakes, I want to make sure that at least we are all on the same page in terms of what needs to be done when you are doing an application. So the first thing that we are going to be talking about is that it is an obvious thing that you will need a steady income. Banks are always looking to see if you can afford that, and if you are one of those people that are still in the job, you are higher up in the rank or even lower, you are salaried, so they always look for anything for 3 to 6 months of your bank statement and your pay slip. And if you are employed, they're going to say, well, let's have a look at this at around about 6 months to 12 months and what are the financials. So that's the first thing. The second thing is that they're going to obviously look for a good credit record. In South Africa, anything plus 600, you can be able to get a loan. Very good would be around about 670. It will give you a better chance. So use platforms. There's so many platforms that are available now. ClearScore has been one of those that are like in our faces with so many ads. If you're one of those people that watch news or you're on YouTube, TransUnion, Experian. So check your score before you actually go and do an application. We've done many deeper videos of understanding these things, but today I'm just flying through. Number 3 is that affordability check. This is like the biggest problem that I see. So banks calculate what is called debt to income ratio. I'm going to mention that again, debt to income ratio. So in South Africa, generally they look at this to say, you want to keep a total of around about on your debt, around about 30 to 40%, or should I say under the 30 to 40% of your monthly income. So they look into that. If you are already above that, then they might say no. So many of us don't understand that. I think that's the biggest one. So we've got a bit of money that's coming in steadily, but we don't have affordability. This is for you, my good friends, who are learning how to use the debt. And I always say to people, using debt is like having a sword or having a gun or having a fire, right? Or having sex. Yes, it's got benefits and it's got pros and cons. It's a double-edged. Sex is good when you're married. The fire is good to warm you up, but it can burn stuff. The sword is good, the sword is the gun. It is good, it can protect you, but it can also be a detriment to yourself. So use debt sparingly, use the right thing. So the fourth thing is employment history. Banks are always looking at a stable employment. So have you been in your employment for the last 6 6 to 12 months. They prefer that, so they're like, this person is actually in a steady employment. Then the last thing is that I'm going to fly through around, and then I'm going to jump into common mistakes, is supporting documents. Is your ID there? Is your permanent residence? Is your pay slip, your bank statements, and all of these marriage certificates? If you're married, how? If divorced, all of these paperwork, they need to be available. You might be able to qualify for X, but actually you've been married before and you don't have a divorce decree. Now all of a sudden you now need to go and look for your attorney and things like that. That will get you declined, my good friend, or it will just expire. So here we are. I'm hoping that this has made sense. I just wanted to fly through all of these things so that you are ready. So get ready with your paperwork. Get ready with being in employment for long and all of those things. But today's video is to talk about, more importantly, of the common mistakes that you should be avoiding. And I'm going to say this, you should be avoiding. And I'm also teaching myself at this moment, because sometimes some of these things do creep us. Common mistake number one that I'm seeing across the road, everywhere, whether male, female, I'll give you a common mistake and I will also explain how you can avoid this common mistake. The first one is that we are applying without even checking our own credit. Yes, right? So you're just sending all of your paperwork to the bond originator, and that's called applying blindly. And bingo, you get rejected. So how do you fix that? Very simple. Check out your credit score in any of these places that I've spoken about earlier on, and fix some errors. Someone else might snitch your ID, go and open a Woolies account and you didn't know about it, and bingo, you can see that on your report. So regularly check for your report. There's also other facilities that you can jump on, and they can give you updates. If someone is hacking your ID, someone is checked, they will send you a message to say so and so. All of these things are at your disposal. If you are in the game of real estate, this is very important. Protecting your ID, protecting your finances, it's the asset that you have. You don't have any other asset. So let's jump on to mistake number two that you can avoid. Is this making sense, my good friends? I hope it is. Now, this one here is like, I think everybody has this, especially uneducated early investors. You guys, you fall into this mistake. Too much debt in your personal name. There's nothing wrong with too much debt, but too much debt in your personal name. And this is specifically the debt that that is bad debt. I wrote a book, From Bad Debt to Problem Mogul. I love debt, but the debt should be good. So some of you have store accounts, car financing on your personal name. You got loans. You took out a loan for your bride in your personal name. And all of this, my good friends, all of these things can ruin your affordability. How can you fix this? Pay down all of your debt if you can. That's number one. Before you start to apply, obviously. But this is my gold one. This is my gold one. If you are here, right, and you are wanting to go through this that we're talking about, which is creating alternative income through real estate, I would urge you to say, like for instance, I have nothing in my personal name. Taurai owns nothing. Zero. I have no debt in my personal name. TJ, so all these properties that you're buying, how do you buy them? Well, I buy them in entities, companies, trusts. So the debt is never sitting on me. It's sitting where? In those entities. Me, I am zero. Also, that means that I am not worth anything. So this guy is not even rich. Yeah, I just learned the art of controlling. Controlling. I'm going to say that again. Controlling businesses that are wealthy. But I don't own anything. So in my personal capacity, zero. I own nothing. I owe nothing. So for this reason, my friends, I have zero debt on me. I managed to do that not so long ago, including my personal house, my good friends. Actually, it's no longer personal because it's not mine. It doesn't belong to me. So here we are. Does it make sense, my good friends? The debt is not yours. Keep the debts away. The next one, which is also, I think, one of the common mistakes, because when you're employed, you don't own nothing much, right? So your cell phone, you get it off your name. Your car, you get it off your name. Move some of these things into the companies that we are creating, and we are now making a bit of money by that house and that house. So move the cell phone, make it a business phone so that you can claim in the business. Petrol maybe, move it into a company. So there's lots of things that you can do, my good friends. Let's just be savvy. Okay, all right. Number 3. Remember, I am talking to you who are employed today. And you are wanting to get as much as OPM, other people's money. So how do we do that? Mistake number 3 is that you tend to switch jobs before applying. So you were at Absa and you realize that if you're to jump to the next bank, which is Standard Bank, I used to do that quite a lot. And I would get anything between 20% salary increments to around about 40. And bingo, it's a good income. But that's bad. If you are just about to apply for something and then now you're at the new employment and they think of you that it's a red flag. So for this reason, my friends, most banks, they raise this as a red flag and they may not apply you. So what you need to do is simple. Just if you're busy with the transaction, just wait until your home loan has been approved, or change the jobs and then wait for the cooling off period of, let's say, 6 months to 12 months, and then you do the applications. Or just do what one of my good friends does. He has never moved jobs. All he does is that he finds jobs internally and he just moves up the ladder. Hey, my friends, I apologize that I had to break this conversation, but I just wanted to bring you in this conversation of property management. This can become such a hassle. If you've got more than one tenant and they're in different places, this can really become a stress, because all you're now needing to do is to manage tenant issues, maintenance calls, late payments sometimes, and endless paperwork. So my good friends, I have been deploying all my properties to a company that is called Productive Realty. They are out in Boksburg, and all they do is manage properties, particularly for early investors, particularly for seasoned investors, actually for all investors. And they do this because they themselves, they are also investors in properties. They understand the game of investing and managing. The money is not made in buying properties. I always say to people, the money is made in the management of the actual property, because that's a lifelong, you need to be able to pay all the things that you need to pay for. So the company Productive Realty, my good friends, and Leroy Slava, he has a big team there, and they manage their portfolio, and they can also manage your portfolio. So if you're in and around Johannesburg, particularly in the east, they are readily available to actually just be able to jump on board and take over your properties wherever it is right now. They will do placements for you. All of these things that we spoke about, the tenant issues, all of that will be gone, because Productive Realty will be able to manage that for you. So my good friends, all you need to do is drop us an email. You can see where it is here, and the team at Productive Realty will be able to take all of your hassles away from your tenants, and you can be able to have peace of mind, sleep, hassle-free investments whilst they are managing all your tenants for you. So what are you waiting for? Be like me and jump on to Productive Realty. Let the guys help you out. The fourth one is, this was deadly. This is particularly earmarked to you who have maybe left the employment and now you are like self-employed. I don't believe anyone should be self-employed, but if you are, that's terrible on you. I've never been self-employed. I've owned businesses and the business has employed me. So I don't know if you're self-employed, what does that mean? But yeah, you are here. So the self-employed people, you have what we call inconsistent income. So I want to say this, banks get nervous if your income jumps up and down. This month you're 200,000, next month you're 20 grand. And someone says, but it's the life of the entrepreneur. Yay! Not really. Create the consistency. If you're going to be paying yourself 20 grand, just pay yourself 20 grand consistently. You know, if the 100, if the 20 comes through, save it into the business, but continuously pay yourself that. How you can fix that? Keep income that is consistent. So reduce these cash deposits. Try to show what I want to call a healthy, profitable business in your business. So if that's what you're doing in your business, but above that, you as the owner of that business, how are you managing that to pay thyself? Then the last one that I want to give you guys before I land the plane is, many of us will rush into the application. So we rush the application, we get a bond originator, or sometimes we actually don't. We go to the branch ourselves and we apply without some due diligence of what is required at that bank. Or we apply without understanding the preparation of everything else that is needed. And then thereafter, maybe the application gets to expire and you are rejected. My good friends, what I generally want you to do is, if you are going to do an application, is particularly for a home loan, try to use a bond originator. I've got 2 bond originators that we work with. The one kind of like looks into the commercial space heavily, but they also do home loans, and the other one specializes in home loans. So if a deal comes through and it's a no-brainer, it's a house, we just send it through to the guy who does home loans. And if it's an in-between, I'll send it first best to the home loan guy, and then if he declines, then I'll send it to the commercial. Because the commercial guys, they've kind of like tasted the deals, the 10 million rand deals, the 20 million down deals. So, you know, if you're now saying to them, hey, you generally get paid like, let's say 1% commission on them finding money for me, and they are busy looking for 20 million, and I give them something for 2 million, where's their efforts worth? Obviously the 20 million, so my 2 million is going to suffer. So give the specialist the right attention. Does it make sense, my good friends? Now, before you go away, I just want to say to you, I want to give you maybe about 3 tips. I know I've given you some help here, but let me give you some more help, Some more help. Right. The first one, work with a bond originator. We've already exhausted that one. Then the second one is that if you're a first-time buyer, there are some banks that already declare, hey, if you're a first-time home buyer, come to us. Go to those ones. They understand. They specialize in products that are geared for first-time home buyers. More importantly, another tip, if you are married or if you're in partnership, right? I've done this with my wife. I've done this with my business partners. We apply jointly. Where I was applying for 2 million, now my other partner is coming in. The muscle is now bigger. Now we're like 5-7 million together. Now, can you see that? There's power in these partnerships. And then the last one that I'm seeing many of you making mistakes on. You go for the property, but you have forgotten to save for transfers, for legal fees, and now the bond comes through at 95%, but you have no money to close it. Now you're running around your cousin, your aunt, your auntie's cousin, your cousin brother, and your cousin sister, and you're asking for this bond registration and the attorney fees. My good friends, you can do better than that. So as I land the plane, I just want to say this. Getting a home loan close to 100%, or even surpass that. It's possible, especially if you're doing it for residential purposes and you're wanting to do that for investments. Just prepare smartly. I think that's what I want to say. But I think my tip of the day, prepare smartly and avoid the common mistakes. I've given you the common mistakes already. So look at your starting process now. Say to yourself, if I was, let's say your name is Tabo, right? You say, Tabo, if I was the ones going to do the application with what TJ has said, you write the notes, maybe just replay the video, né? And write the notes. What do I need to do? What do I need to do? What do I need to do? You write everything down, right? Then start to see in your capacity. I like to give people actionable things that we learn and then we can go and do. That's what Mondays are for. So now you have a list, and then you look at it in your personal perspective, and you should be able to identify your gaps, my good friend. So what are your gaps? And fix that, right? And fix that. And once you start getting your 100%, hey, let's celebrate you. Let us know. Just hit us on the notes. Say, hey, teacher, I got 100%. Woohoo! Well done to you. And we are aiming for you to get alternative income. That's what we're here for, to help you on your journey. On the next video that we are going to publish on a Monday, all about learning, I am going to give you tips on how we can navigate the interest rate. So there is multiple interest rates and different banks and different thingies. Lenders, they do give different interest rates. So what are the interest rates for home loans that we should be able to cater for? Someone asked me that question to say, TJ, how does it work? So we are going to answer that question on the next video that's coming up. So until we see each other again, my good friends, happy investing.